Hi, welcome back. Cindy Leader, Lattes and More. Today we're going to talk about the VIX. The VIX, what is that? It's a volatility index. Its real name is the Chicago Board of Options Exchange Volatility Index. We're going to call it the VIX. Everybody does. So we're going to talk about why it's important, especially in the US market. It measures like the pulse of the market. It's a figure some analysts look at, and it's going to tell you what the stress is, what the pulse is in the US economy. So I've decided I'm going to break it down into three levels. High intensity, we're going to start with. When the VIX number is high, we're going to get on the charts, and I'm going to show that to you. When it's kind of in the middle, and it's like you might want to start paying attention to the market, and then when it's low and how we feel when it's low. So let's get to it. Okay, so let's work our way to our VIX. I think it's here. Here we go. I have it tucked under with world currencies because I always like to keep an eye on how currencies are moving globally because that also affects what you trade. But here's the VIX, the Volatility S&P Index. It's under VIX on TradingView. So this measures the volatility in the market, whether something's going crazy, whether, things are calm or in the middle. Okay. It measures the stress in the market, whether there's fear or greed in the market. This number has ranged anywhere from, and we'll look at the chart. I'm just on the hour time frame now. Anywhere from seven, nope, anywhere from eight in like 2005, 2006 to 80. And we're going to talk about the higher number. The higher the number, the more fear in the market. Now, if any of you have been trading for a little while or around the block for a little bit, there is an event that just recently happened, just a few years back, that really shook the world globally and also the US market, and that was COVID. So let's go. Where was I? I think I drew this up for you. Let's go to monthly chart. Oop. Oh yeah, be careful. Um, I think it was the monthly chart. Okay. So I'm really squishing it down for you. Okay. So we're ranging here, right? Back in 2008, we went all the way, and I have a touch screen, so we went all the way up, and I put my vertical line next to the candle that was affected. This was April of 2000. Oh, this was, hold on. I don't know what month that was. I don't know. I'm first floating to the great Cindy. Gosh. Well, I'm first floating to the Great Recession. Here we go. And September. I didn't know, I remember the Great Recession because I was new with a family, a homeowner, and I remember not wanting to look at my investments because I knew they were cut in half. And we just had a pact in our house like not to look. And I have to tell you, back in 2008, I didn't even know what any of this meant. Yeah, everything that we have in our investments, it's half gone. That's all I knew. And honestly, I didn't even know whether to be afraid or not. I didn't understand anything back then. Now I do. But 2008, you can see it went all the way up. Here's this wickety wick. It went all the way up to, let me put my cursor on it. It went all the way up to 96.40. Fear in the market. This is when the banks crashed. Lehman Brothers and all the banks. I mean, it was bad. I knew someone at the time who worked for them. To talk about someone in shock after all that. And the only other time that it has gone to some, so two times in history it's gone over 80. And of course, the other time you can guess, I don't know why I'm all screwed up here, is COVID, right? This is, I think I did put it on here. Let me just move it so you can see. Yeah, COVID. It went all the way up to 85.47. Fear in the markets. People are selling everything. Um, People don't know what to do. Markets crashing. Markets crashing. Now, these are monthly candles. If you're a trader, these are monthly candles. If we went to the daily or to the hourly, man, to have this size of an engulfing candle on a month, bye-bye. Bye-bye stocks. Um, Twice in history did we spike like that. And you can understand why now, right? And we're not close to that. You can see the number today, March 18th, 2025 is 21. 21, 15, 16, 20, 19, 18. Very comfortable. We're okay. We're okay. Nothing to see here. Nothing to see here, folks. Um, so that's a time when people just don't know what's going on. Okay. Um, when there's fear, stocks are low, equities are low. And we just had sort of a prime example of that. Let's go to the day chart. And if you know, you know. Um, we have a new administration in town, right? We have a new administration. So, um, I don't know what I looked this I forget what this was. This was 26. This was pretty high for us. Um, I don't know what that was. I think it had to do with probably might have been related to the yen and Japan and China. This I'm not even sure why I was showing some student something that was happening here. But you can see this is oh, this is February 3rd. I'm not sure what that was. Some kind of gap there. I think that was also related to the yen. Uh, this is tariff talk right here. Tariff talk. What are we doing here? And what else is going on? There's global unrest, right? Global economic unrest right now. So we spiked just a few days ago, March 11th, March 10th and 11th, we spiked all the way up to, I want to say it was 29. I remember because I was watching it. Now we're kind of back. We're getting back. We're still dealing with some unrest, but you can see we're pretty even keel. We're pretty even keel here. This is where we want to be, but when we spike, there's something going on in the market, and it's got a lot of people a little bit antsy. Just want to make I literally have messy notes and color-coded notes. So I just want to look through them. I didn't organize so well because I wanted to get this done for you guys. And I just want to make sure that I'm covering everything that I wanted to cover. So fear in the market, the higher the number goes. So analysts are watching that. Okay. Um, and when you have fearful traders, it's usually indicative of some sort of market crash. Okay. I already said two times in history, the Great Recession, 2008 and 2020. I almost feel like I can be done with that page. Thank goodness. Um, um, yeah, so right now we're just kind of even keel. Nothing bad has really happened to push it all the way back up to 85.90. This was part of the way there. Um, but nothing bad has really happened since COVID to rock us, right? Um, and even going back further, it was also in our charts don't go back that far, but 1998, 2002, 2008, 10, 11, 15, 18, 2020, and 24, we had sell-offs, you guys. We had market sell-offs. So, and you can see right here. I mean, market sell-offs for sure. Here, bam, bam. So, we got to watch out for that. Um, so the other thing, when the VIX is high, typically people who would not normally go to the diner, maybe it's a family gathering, people start talking about the market when they normally don't understand it or wouldn't be talking about it. If everyone's talking about it, that there's something going on. And it's just in uncertainty and stress and a downturn in the market. And I almost kind of feel like way too many people are talking about it now, but I'm not sure if that's our new administration or not. So let's move on to the lows in the market. In 2006, we were down to 8. Okay, we've been floating around. Let's just like squish this down for a little bit. We've really been floating around. This is 2024, 11, 12, 21. Last week we were in here 16, 19, 20. Again, today we're 21. This seems to be the norm, this range right here. There's like a really cool feature on here. What happened to my screen? There's a new feature if you haven't seen it. So this little circle dot thing, and what you can do is you can highlight and then it disappears. So this is kind of the norm area right here. Did you see that disappear? This is kind of the norm. So we're kind of hanging out. Markets are kind of doing their thing. People are buying and selling. Um, but the lows, um, this is when people say there's greed in the market. Okay. There's greed. Sorry. There's greed, there's confidence, and this is good for the stock market. Apple's doing really well. Okay, stocks are up. This is good. You want your stocks to be doing really well. So people are buying. Okay. Things are good. There's greed in the market. People want to buy stuff. Okay. People want to own stuff. I want to see if there's anything else that I wanted to say. Um, and and this is also a good thing when the VIX is down, yields, the 10-year, the 2-year, the 30-year yields are down, and then indices kind of follow that. And bonds might go up, so you might, want to stick yourself into some bonds when this is happening. Um, but when they cut rates, um, the bonds typically go up, and this all kind of interrelates with the VIX. Okay. So you want to keep an eye on yields if you're an industry trader, um, bonds, and also the VIX. Trying to think if that was, I feel like, um, yeah, I feel like that's it. for the lows. You know, lows are okay. Lows are okay, but there's a little bit of greed there. Um, and when the market is high, there's a lot of fear there. But let's talk about the middle ground. Let's talk about the 45 area. When you get into, um, let's go to like the back to the monthly chart. Ugh. When you get to this, and I had marked this. Okay, these were the two highs that we just hit in the past few years, the 96 and the 85 for the Great Recession and for COVID. But when it gets to around this orange line, okay, this is where you want to like sit up and go, and what's going on? And pay attention to the market. You want to be careful in this area. And right now, are we there? We're not there. We're down at 21 right now. We're not even close to there yet. But we could be. We could be. Let me tell you a little bit more about that 45 area. Um, what could cause it to spike? Because that's like a double spike. If we're at 21 today and 18 and 19 through here, what would cause it to spike here and rest here for a little bit? Well, there's lots of things, okay? Things, things like a bank failure. Remember back in September last year? When did we have that bank failure? Um, I want to say I should know this. I should know this. Hold on. I'm just gonna like take a second to look that up because I remember that bank failure of Silicon Valley. Let me look it up. So I remember trading through it. I just couldn't remember when it was. It was in March of 2023. So if you see right here where this big wick is right here. So the VIX went from the previous day, it went from 17, and then the next day it was up to 30. Okay, so when there's bank failures, when there's wars, we had three that during that time, the Signature Bank and the First Republic Bank, like boom, 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 all back to back. Um, when there's a war, okay, when there's an ongoing war, that you'll see a difference in the VIX. Also, sorry, I had to look up the exact month of the Russian-Ukraine war, which I should have known because it was just recently. February 2022, we had a VIX spike. Let me move that. Yeah, it's right here. The VIX was spiked also at this time. We're like, what's going on? A bankruptcy of maybe like a Mag 7 company like Apple. Imagine if Apple went bankrupt or Meta or one of those. Man, there would be fear in the market. A mass layoff, negative GDP in our economy. Like any of those things could set off a trigger to get back to this level right here. Any one of those. And then we would just have to settle it in. But this is when the Fed would step in and bring it back down to earth. Um, yeah, and what happens when you reach 45, one more point, when you reach this number, that's when people are like, oh my gosh, sell my stock, sell this, sell that, sell the bond. Like you just want to have like cash. People get really fearful, and they want to make sure they're in control of their monies. So there's typically a big sell-off then. But when and why does the Fed step in? You know? The Fed considers all these financial conditions and it decides um, when they're setting their interest rates, right? And like if you look back when the VIX was high, Um, and the stock market declined and credits were tightening and there were recession risks. The Fed stepped in with rate cuts to like stabilize everything. So they watched this too. Okay, there was a period when now I'm jumping around. There was a period when the VIX appeared to be broken, it said. Like back in 2023, it just wasn't reacting at all. I mean, look at this, like flatlining, flatlining, flatlining. Like, what's going on? It was, 11, 16, 17, month after month. It was just not reacting to anything. Um, and uh, yeah. So even the Fed noticed that. So people started talking about it and it was kind of like a joke. Is it broken? You know, but the Fed is they will react. And you also, as a trader, you want to keep an eye on that. Like if you're on a cruise ship and you're, sliding down the slide, you're having your cocktails, but you see on the down low, you see the crew or the captain or the staff like starting to go over to the life jacket cabinet and like take an inventory and they get really hush hush and there's just this stillness and they're counting and there's murmuring. Watch out for those signs. Like there will be signs in the market that something is about to shake up. Um, and I love this part of it. As a fundamental trader, I'm not with all the Fibonacci's and all these indicators. I use my theory. It works. It's simple, but I'm also a key fundamental trader because that's where the moves are. That's definitely where the moves are. Um, so I think that's everything I want to say on the VIX. Man, I just had notes upon notes on it for a while, so thank you for being patient. And I hope that explained the fear and the greed in the market and the highs and the lows and what to watch out for. Watch it again, reach out, join my platform. Lattes and more, we talk about these things. We look at it. When inflation numbers come out, what do the VIX do? What's happening? When, our new administration and his sidekicks make comments, what did the VIX do? So it's always pretty interesting. Um, I want to thank you for being here and follow for more tips like this because it's just going to make you a smart trader. All right. Thanks for joining.